Hey, and welcome back to my channel. My name is Joe Holmes. I'm a realtor, mentor, and investor. And today I'm going to review a video from another YouTuber, and we're going to talk about the 50-year mortgage, whether that's a good idea, bad idea, or my thoughts.
In today's video, we're covering one of the biggest changes ever proposed for the American.
I want to say a couple of things. The 50-year mortgage is obviously gone crazy and viral out there. And I was listening to this guy the other day who I listen to a lot. He makes a lot of common sense, but I wanted to comment on some of the stuff that he was saying in this video.
Housing markets. It's the 50-year mortgage. So yes, 50 years, 5 decades, half a century. And I'm going to show you why this idea is suddenly being pushed, who actually benefits, and why this could trap an entire generation in debt. But before we get into what's happening today, we need to go back and understand how we got the 30-year mortgage.
Okay, so that's what we're going to be talking about. Everything that he just went over, and we're going to get to the next part here where he talks about some benefits or not benefits for the 50-year mortgage.
Analyze it. Let's just say the median home price is, we're going to use this as the starting figure, $415,200. And let's just say that you put a 10% down payment. And the interest rate that we're going to work with, let's just say around 6.17%. So these are like the going rates. Okay, if you take the 30-year mortgage payments, that's going to break out to $2,288 a month. If you go with the 50-year mortgage payments, it's going to be $2,022 a month. So that's a difference of $266 a month, right? Okay, so yes, the monthly payments go.
Yeah, and that's totally depressing. When I saw that, it's like you're only saving $266 per month. You know, if you're trying to qualify for this home, I don't know that the bank is going to say anything different, you know, like, oopsie, like, oh, great, you're saving $266 a month. It's not a big difference there, you know. So I tend to agree with him that between the 30 and the 50-year mortgage, it's not going to make a lot of difference other than what he talks about later on, which is you might be a renter for the rest of your life, which is the part that I'm not going to agree with. So let's
goes down, but here's the problem.
Let's go to the next area, the next section.
Because there's now going to be more demands. So who's going to win? It's going to be basically, it's going to be Wall Street. Now, who does not benefit? It's going to be the buyer, because.
Okay, so let's talk about that. Is that any different than what we have, whether it's a 30-year mortgage or a 50-year mortgage? Yes, real estate agents are going to make money because they're selling homes. Builders, hopefully you're going to start building more homes. Isn't that the goal? I think he did talk about that in this video. If you want to watch the whole thing, I recommend that. Banks are always going to make money. Yeah, you know, normally on a 30-year loan, you're probably paying 2 to 3 times the amount of loan that was taken out at the time. So that's just the way that the 30-year mortgage works. Investors in Wall Street, you know, all the same people that always make money. Who it doesn't benefit is the buyer, and that's where I have to disagree. The buyer does have a great benefit in that they become a homeowner. And isn't that our goal? Isn't that the American dream? Isn't that what people want? They want the younger generation to be able to have homes that, you know, they can call their own. They can paint the room whatever they want. They can add an ADU, whatever they want. Obviously, if they're a renter, they can't do any of this stuff. So let's fast forward to the next section.
I would say that this works because humans think in monthly payments, not in decades. Like, that is the truth. Short-term mindset. Like, people don't calculate, oh, how much will I pay over 50 years? No, they calculate, can I afford $2,619 a month? So I'll tell you that banks know this. Politicians know this. Builders know this. The consumer usually does not because, well, I would blame it on a lack of financial education. So, I mean, if you're watching this, then you probably know much more about this than the average American. Now, I just want to...
Okay, so I think he said the quiet part out loud at the end there, financial education. And I agree with him totally with this. And what I would say is you need to get homeowners into these type of properties. It doesn't mean that you're going to pay this mortgage for 50 years at this interest rate. My God, in my lifetime, mortgages have gone from 2.5% in 2008. When I first purchased my home, I was paying 14%. And obviously that was 45 years ago. But that doesn't mean that I'm still paying on my mortgage at 14%. As mortgage interest rates go down, you refinance, you make extra payments. I think the goal of the 50-year mortgage is, again, home ownership, to get people to buy properties and create wealth with those properties. And he's saying that, you know, in this video, that you don't create wealth with properties, and I totally disagree. And I'm going to prove it at the end here for you. But we're going to go on to the next section.
Mortgage is not a solution. And I'll tell you this also, the real problem is not the 30-year mortgage either. The real problem is that we don't build enough homes. Zoning laws block construction, and construction costs, I mean, they're surging because obviously of inflation. And I'll tell you this, stretching a mortgage does not fix the housing market. It hides the problem. And I would say that this is like financial duct tape. Now, I want to tell you this part. It's very critical. There's going to be legal hurdles and risks if they try to...
I totally agree with that. I'm 100% on board with that. We need to cut the red tape. We need to cut the hurdles. We need to do all that on top of, you know, a 50-year mortgage or a 30-year mortgage. But, you know, if we could build more houses, then this would definitely be the right way to go. But until then, in my opinion, you know, if a 50-year mortgage works for you and you want to actually get into a home, no matter what the interest rate is, if you're looking at this video right now, do you think that interest rates are going to be going down here next year? I mean, I'm raising my hand that they are. And they've had a couple of quarters where it's gone down, and I think it's going to continue to go down next year. So if you buy something now at a high interest rate, then refinance later. That's always been the path for home ownership and creating wealth.
Again, there's going to be pros and cons, but the question is it worth the trade-off? So the benefit, yeah, it's going to be slightly lower payments, but then at what expense, at what cost? You're going to have higher interest rates, a slower equity buildup. You're going to have debts into old age. This is not going to improve the home supply, and it's going to create a system that keeps people paying forever. So I tell you that.
Okay. I totally disagree with this premise. And I'm just going to give you a simple fact. I bought my house in 1980. President Carter was in office. I'm on my mortgage, and I purchased a house for $160,000, and it was at 14%. It was a 30-year loan. And the house today, I'm still in the same house 45 years later. The house today is worth $1.4 million. So even if I had held on to that 14% mortgage at $160,000, and it took me all the way 30 years to pay that off, you know, so let's say I paid double that. So $320,000 on that mortgage, but it's now worth 1.4. Do you think the appreciation of me owning that house was a benefit, even at that 14%? And you know that I didn't keep that 14% as a new president came into office, Ronald Reagan. He started lowering, not about him, but the Fed started lowering interest rates after that because the economy started getting better. And I'm literally refinancing. It got down to 10%. I refinanced. It kept going down to 8%. I refinanced again. And that's another subject we can talk about, the refinance debacle. I guess I don't know if I call it debacle, but they were offering at the time, no money refinances and stuff, but just don't listen to that because they add the fees and everything onto the loan at the end of the day. You're going to pay for those fees. But then I got really down to a great interest rate. I was like 5.5%, and I kept that for a long while. I made double payments, so I paid on the principal. And finally paid it off before the 30-year mark hit. I think I paid it off in 20 years. So I think what the president was trying to say with the 50-year mortgage is maybe this is a solution. I mean, a really small solution because you're only saving $260 whatever dollars he said in the beginning. But the goal is to get Americans a chance to buy a home of their own and get them out of the rental cycle. So if I was a renter back then, 45 years ago, and I'm sitting here now still as a renter, what do I have? I don't have anything. So I think the goal of the 50-year mortgage is to get more people to purchase homes that they qualify for. Don't think that I'm saying that, you have a warm body, we're going to give you a loan type situation, which is what we had in 2008. But the goal is to get more Americans to actually own a home and do whatever they want with it. Put pink room for daughter, blue room for son, add an ADU, add a swimming pool, do whatever they want, but have that property that is going to gain value over the years, which is what traditionally real estate has done. So anyways, that's my opinion. Again, I do like this YouTube guy. I listen to a lot of his stuff. And I'm not disagreeing with him in particular. I'm disagreeing with everybody out there who's gone crazy over this 50-year mortgage. You're not listening to what the president's trying to say.